What is going on, guys? Welcome on into today's Power Hour live stream, Monday, April 24th. We are looking right now at SPY over the past couple of days, couple of weeks on the 1 hour chart. And what we can see is we are essentially at the exact same spot we were at on April 4th, 20 days later. Gotta give it to it. So that's the deal. We've been shopping around. That's kind of the nature of the past couple of weeks. And it hasn't, each new high was essentially met by sellers every single time. And a lot of the lows were met by buyers, since that's kind of the nature of this past couple of weeks in the market. A lot of ups and downs and a whole lot of no direction. That makes any sense? So we're going to get into it here. We're going to talk about what's going on, and we're also going to dive into some potential covered calls that we could sell. I say that now. The only thing that I am now second guessing on that is just how much option premiums are going to be, which could be a little bit, I don't want to say concerning, but less ideal for selling covered calls. So, ideally we want to be selling covered calls when premiums are a little more elevated and when stocks are pushing higher. And the problem that we have right now is that, well, we got a lot of chop. And so the VIX is down to, let's see what the VIX is at. VIX is at 17 bucks. I mean, what do you got in the VIX here, guys? I mean, we got higher lows, don't get me wrong, right? Which is decent since Wednesday of last week, but it just sells off. It pops up, sells off, pops up, sells off, pops up, sells off. Kind of that same deal of that morning sell-off, afternoon rip. If you go to the 5-minute chart, what do we have? Morning to midday sell-off, and then afternoon rip again on SPY. So that's what we got for us here. What's going on, Flippa? Didn't do a single trade, too much chop. I actually did, and there was a couple that were pretty valid ideas for me. And the reason why was because of the first one that I missed. It realistically should have been looking back a one and done, and I would have been done, and it would have been sick, and that would have been it. It was Tesla. So I saw Tesla this morning, and I had marked out this low off the open, and then we essentially came down, pressured that level with lower highs, which is what I like for increasing the chances of a breakdown. And so I decided at the time when I saw that happen, first off, I did not jump. I jumped over to Tesla when it was on this candle, but I missed I didn't have the contracts pulled up at the time. So I was like, let's just see, this past couple of days has been a little wonky. This will be the first opportunity for a nice, setup that meets the criteria I'm looking for. In the broader scale that I did, as long as Tesla's under 165, I would be in bigger picture time frame terms. I'd be more bearish than bullish based off the charts. So I'm like, this lines up with the short, but I decided not to take it because Monday, let things kind of play out. Let's see how the week kind of goes before I start taking stuff. And what ended up happening was we got a massive move. Tesla goes, the contract I was looking at freaking exploded in a matter of minutes. Really 15 minutes, this thing was in nuts. How big it moved. So I saw that happen. I'm like, geez, that would have been a killer day. It would have been probably the biggest day that I, off of 2 contracts even, the biggest day that I would have had in a while, because that's the biggest range, right? That's the biggest range that we've seen in a long time off of a move like that. And I didn't take it, and then guess what happened? So Tesla came down, and now it has been grinding on up all afternoon ever since then. So it is what it is, but that's the missed opportunity from today. And then so I played AMD. AMD did me dirty. Looking back, it was a little late to the party, but on higher time frames, this looked good. Nice, essentially same thing, right? Lower highs into a support level. AMD's big picture chart does look a little bit more bearish to me as well on the higher time frames, the 1-day charts and stuff. You go to 15-minute chart, confirms that idea even more for a downside play, right? Lower highs, clear lower highs into a support that broke. Support broke, took the trade, and then ended up getting stopped out. Once we pushed right back up, it did the quick little fake out. So that was my day. It was a small loss, but that was essentially it. The Tesla play almost looking back, this was a little bit late. You know, we had a couple stair steps down, not the perfect, most clean, but we had a couple of these stair steps down, and this would have been like the third one or whatever, fourth one, which historically the probabilities are lower the later on the day, and the more of these patterns that play out the second or third time you see it, you know, eventually it's not going to work. So that was my mistake by playing it that way or looking at it that way. But I think I had the Tesla, not the bias, but I had Tesla in the back of my mind saying, hey, if this is a sign saying we're going to start seeing some nice breakdowns and Tesla wants to lead the way down, AMD could be the next candidate for the next level down. And it was decent. It just, you know, got the false break, and, you know, really just I just traded it late. You know, Tesla was the missed opportunity. So that was my bad for missing it and doubting it. Realistically, you just got to take them all. And, you know, if it meets the criteria, take it. You know, the only reason why I didn't take it was because I had this bias of the past couple of weeks in my head, you know, so that's not good, right? But there'll be more the rest of the week. I'm sure there'll be some more, and there'll be more next week, and then the week after that, and the week after that, there'll be plenty. So it's not the end of the world. The one in the VIX was very interesting. Today it looks completely different to the VIX. See, I don't know, man, with the VIX right now. Moves today were individual named SPY sitting flat. Yeah, if you jump back to SPY compared to the individuals, SPY had a high of the day at 413 pretty much, and low of the day at 410.60. So not about $2.50 range. Same thing, right? It's shitty range on SPY. Again, there's opportunity here if this continues to play out for a while. Don't get me wrong, because you could have looked at this and said, hey, you know, we're coming down into some nice bounce levels that SPY has bounced off of, and we barely got there, but you could have looked at that way and played that on SPY, and that would have worked. But at the same time, you're thinking we've been chopping for so long, you know, there'll be that day that comes that we're going to have a big move up or down, and like, you don't want to have this bias of chop, kind of like my head of Tesla, to not take that. You don't want to have this bias of chop that causes you to miss the opportunity that's in front of you, right? So that's the idea. Here's the 10-year. Let's go to the 1 hour chart on these guys. 10-year yield. Maybe the 4 hour chart's better to look at. Yeah, it's a little better to look at. The 10-year. So what do we got? It's down 1.7%, but it's still just kind of like in the middle of the range of this channel. So not much going on. The dollar is a little interesting. I want to go to the 1 day chart here to clean it up a little bit. Check the dollar out. The dollar is a little more interesting because it is starting to trend back on down to those lows. This setup to me, I mean, I guess, how do you play the dollar? You can play UUP puts, I guess. Which we can look at today here in a second. But you can also go long silver, long gold, and maybe Bitcoin if you want to play that. Yeah, I would say that the safer bets are long silver and gold, long some of the precious metals. When the dollar's weak, that tends to be a better play. But if we look at it this way, we are making lower highs. And, you know, it's going to be the third test of this level now, potentially, if we get down, you know, another 50 cents from where we're at right now on DXY. And that could signal, you know, maybe a bounce. But if this trend continues, we're looking for eventually a breakdown here. So there could be an opportunity on that front. And I mentioned that because I want to bring myself over to the Robinhood portfolio and start looking at if we can start maybe selling some covered calls. So let's do this. Let's look. So right now we're up $263 today, believe it or not. Why? Good question. Because we had puts and hedges that ended up panning out nicely. I actually had this AMD put that I bought. I'm realizing like last week I completely forgot about it, but I bought it. It's up 3%. It was actually up about like, I don't know, 15, 20% at one point today when AMD was getting killed. Now it's not really. It's just, the thing is though, I like having this because outside of that, I don't really have any tech downside exposure protection in the account. So I don't want to get screwed in a sense if, let's say, the market does roll over from here and then all of a sudden we're dumping off a bit and I'm like, oh shit, I could have maybe had hedged this a little bit, right? So this is what I have out for the next month. And I'll tend to go out a month or two on the hedges like that if I'm going to play an individual stock. And I'm not a huge fan of going long an individual stock right now with earnings risks and whatnot. So I much prefer the ETFs instead to diversify a bit. But yeah, I have put exposure in oil stocks, which oil is ripping today. So those are doing bad today. And then I had AI puts. That's really kind of the deal. Also, TMF is up 2% today. Got a decent amount of that. JEPI is up barely. AGQ is up about 1%. So I got some things that are up, which I'm covering up, which I can move myself a little bit. Let me see if I get myself off the screen for a second. So yeah, TMF is this, JEPI, and then AGQ. Those are up. Soxol is my semiconductor exposure alongside, kind of protection there. But yeah, that's the deal on that front. So my thoughts now are, we did that decently. We hedged and we sold the AI puts. I had AI puts at the 20 strike out to May 19th. And AI hit my target, this blue line right here at $18. It actually overshot it and hit down to $17.50 today. Quick rundown of why. I mentioned it in the Discord, but, pretty clean level right here that we had bounce. What's max pain? Well, look at all the volume, guys. Where's all the volume on AI? It's when the freaking thing has been over $20. All the volume is here, right? Way higher. So where's the pain? Right now, it took some time to play out, but the pain was this breakout didn't really go for it, and now you're breaking down nicely, and AI is at $18. Also got a price target downgrade, I believe, today as well, which is part of the deal. I don't buy much into those things. I don't give a shit about the price target upgrades. I think they're dumb. Let's be honest. A lot of the price target upgrades and downgrades is because somebody wants to get in or out. You know what I mean? That's what it is, realistically, and they want liquidity to do so. So now it's essentially an all-you-can-eat buffet for somebody if they want to buy AI to buy under $20, whereas most people bought it up over 20 and some over 30. So I don't know. Can it go down from here? Sure. Market wants to go down. This can be down in the mid-teens easily, I think. But I got my piece of the puzzle, right? My chunk of change was this. My edge was this zone, and we filled that zone, and I took the profits. So that's it. I think the position made like 50+% overall. Nothing insane. I got in a little bit early. I think I got in somewhere in here. So I had to hold it for like 2 weeks or so, but eventually it paid. I bought about a month and a half at the time, and so it ends up hitting with a little bit less than a month, 4 weeks to spare. So until expiration. So a little bit risky though when you do that, when you put a time horizon on it, which I'm well aware of, but the intention was a hedge, and that's what we got. So that was the deal. That's why we're up a decent amount today, or more than maybe I would have thought we'd be up, like 3% right now in the portfolio. So I have one right here. It's the JEPI. I have a $57 call for May 19th that I'm looking to sell just to collect a few bucks of premium. I already put that option or that covered call order in. I'm looking now to potentially do that for a couple other things, but we have to look at the option chains first because I want to make sure this is a valid idea, or we got to make sure that this, the premiums make sense. Why? Because last Friday was monthly option expiration time, and so a lot of the options are covered calls that I had sold that became worthless, that essentially just cash flowed the portfolio, that are worthless. They expired. Now I have to, if I want to keep cash flowing, potentially sell more. Again, like I said, not the best day to do this or the best time because the market's kind of chopping. The VIX is pretty low. So premiums might not be as high as they could be. But let's start here and run down my list. First position is Soxol. I have 140 shares of this in the portfolio, which means that we can sell one covered call. Yeah, premiums might not be as good due to lower IV. Yes. So let's look and see if we have something that makes sense. Great. Or I'll just put an order in, and then if it hits, great. If it doesn't hit, it doesn't hit. Today, we can try again tomorrow. So I'm going to go to sell, call. Now for Soxol, SOXL, this is the semiconductor 3X ETF. So this I could go out weekly. They have weeklies. I could sell, this week's 17 for 2 cents. Is that worth it to me? Probably not. So I'm going to go out an extra week. Let's go out to May 5th and see how those premiums look. So I can go out an extra week to the end of next week and get paid, for the 1850s. It could be a valid idea. $18 right here for 6 cents. Those are not bad ideas. Also, have to note this too. This week and next week, we've got a lot of earnings. And so when we've got earnings, this has the ability to make or break. And also we got the Fed next week. We have the ability to make a big move up or down. Now, if I were to sell the covered calls today, here's the problem is that if we go up, there's a decent chance I could have got paid more if I were to sell the same strike prices like in a couple days or next week if we go up, or I get taken out next week because we rally hard enough. So there's that risk if I do that. The good is that if we go down, well, I cash flowed a few dollars and the covered calls are going to expire worthless in a week or two anyway. If we do go down in the next week or two, and then, I kind of semi-hedge my downside a little bit. It's better than nothing, but I hedge my downside to some degree, better than it would have been if I did nothing, right? So there's that. So you got to kind of weigh the back and forth. If I go out to May 19th, the next monthly expiration, you might find some better premiums out here, and this makes a little more sense. And to be honest with you, this is where I think I'm going to go ahead and sell, or at least put a line in the water on a SOXL covered call. I'm going to go to the $21 strike because that gives me plenty of leeway. Let's see what these are going for. 4 cents by 5 cents. I'm going to put myself on the ask at 5 cents and just see if it hits for today. If it does, cool. If not, then no worries. So that's what I'm going to go ahead and do. Why? Because I'm giving myself about a month of time to do that and plenty of leeway. You could sell closer ones and whatnot, but to be honest, I've already taken some of the profits on this position over the past couple of months that I've been in it because I am up decently. It's up 37%. At one point, it was up a bit more. I took some of it off, 50+% from my entry point or from my average. And so that's fine. I'll do that. TMF, so that's not filled yet, but that's an idea. It's just tossing a line out in the water. TMF is the next one I want to look at. This one is the 3X TLT, essentially. So this goes up when TLT, this is going to go up essentially 3X TLT. The reason why I like the 3X ETFs, they're not the core of the portfolio. They're pieces. They're not the core of the portfolio. It's because it allows me to play into to get some leverage without having to worry about time horizon of option expirations and having to worry about, I need this stock to go here by this date. You know what I mean? So we could trend that direction or, whatever for a bit. And the time decay factor is not nearly as strong in a 3X ETF as it could be in an option contract that I buy for 2 months out, 3 months out, 6 months out, So that's why I do that. And then I sell covered calls to semi-hedge the downside and the decay factor of these 3X ETFs. So it allows me to play it that way. That's just what I like to do. To each your own, though. And these are not long-term investments. I don't recommend buying and holding a 3X ETF for the long term. They are more so, in my view, macro swings, right? So it's like you're doing it. They have a purpose. There's a reason. In this case, I want to be protected in case we have a bigger recession. And if we had a bigger recession, then what are you going to get? You're going to have a situation where yields come down. The Fed has to cut rates at some point later on down the road, months to years down the road. And then TLT will do well, right? So it's the exact reverse of the Fed raising rates to kind of slow down inflation. If we have inflation coming down too fast and a bad recession, deflation and whatnot potentially, then you'll have the reverse. And so yields will come down and bonds will go up. So that's the idea. So it's like my recession protection. So I have 300 shares of this thing. I've got a decent chunk here, and I'm honestly considering buying more. Do I really want it right now? No, because I'd have to go into deeper margin, which I'm not interested in doing right now. But maybe if the time is right and maybe I sell SOXL at one point, I might. So if I go to the option chain here, sell call, and I'm going to go out to, these are weeklies as well. The problem is this is up today. The problem is same thing. I probably want to go out to monthly expirations to the May 19th timeframe. You're going to get a better premiums. This doesn't look too appealing to me. This really does not. The reason why is because we're at 850 right now, and 4 weeks from now, a lot could change, right? We could be back up at 10 plus, and I just don't really know if I want to sell this for 5 cents at the $10 strike. We can be there, and get taken out. So what I'm going to do, and I'm going to layer in on these, because I have 300 shares, I could sell up to 3. I'm not going to sell 3, but I could. And so in a perfect world, I sell 3 of the 950s and I get paid $30, or I get paid, 10 cents of these going by. Yeah, maybe I get 15 cents. So I can get paid, $30 to $45, cash flow that, and then TMF inches up a little bit or stays flat from here until then. And I just cash flow until the position either there's a reason for me to get out because it's going down, or I no longer believe in the macro view of the recession protection, and then, or we go up enough where I want to take profits and I want to just lock the gains in, right? So that's the kind of the idea that I go back and forth with. So I'm going to look at the 1050s. I'm going to sell one of these though at 5 cents just to see if I can get one. If it hits, it hits. Again, same kind of idea, right? Just layer it in. And 1050 is not a terrible spot to even start thinking about locking something in, because at that point would be up a little bit on the position. So I don't know. We'll consider that. We'll toss that line out there. And then AGQ is the last one. So this is the silver exposure. I'm not a big fan of this one in terms of selling a covered call right now, because I'll show you why. We have to do a monthly, so I have to go out to next month's expiration. I can go out 2 months if I want to. They're not bad. I mean, the premiums are not bad. The thing is, once you get to the $40 strike, then the strikes go by 5. So the 40 strike is kind of pushing where I want to be in terms of like making sense. I could do it. Here's my only thing. My only reason I'm concerned about it on AGQ. If I jump over to the chart, AGQ, here is the chart. What you're doing right now, essentially, is you are holding firm on this area that was a prior resistance, now is acting as support, okay? We just looked at a few minutes ago the dollar. So look at DXY. Does that look strong to you? No, it looks concerning to me, because I can see the scenario where if we start to break down, right, and this has that next leg down to new lows on the year on the dollar, what could that do to silver? That could pump silver to a new high of the year, and that could get AGQ going a little too fast. So what I would ideally want to do on the AGQ scenario, and to maybe cash flow a few extra bucks, is if we get the breakdown of the dollar. This is where I'm kind of anticipating. Is it the best way to do things? Maybe not, but it's just the way my mind is thinking right now. I want to have the silver exposure, number one, anyway, in the portfolio unless the thing went nuts. If it went to like $50, okay, I would say, okay, we got to start contemplating taking some chunks off the table here, because this is done very, very well for me. And that's kind of how I like to do things, then funnel some of that money into, let's say, the dividend ETFs to pay a higher monthly dividend and to recur that dividend and to build that bigger cash flow. That's like the whole point of the portfolio, right? I want a cash flow. So we'll see. But if this thing gets a push up into the mid upper 30s, dare I say a new high, if this thing ends up holding and going, this is the time, because who knows where it goes. Like, I don't know how high it wants to go. But the time to do it is on that push, because at that point in time, you're going to have a lot more excitement, a lot more eyes, and you're going to have a lot more juicy premiums on AGQ. And I'd much prefer selling covered calls when we are ripping up, when we are having we're up today, but it's up 1%. This thing could do 3, 4, 5% in a day easily. Right? This thing could do 10, 15% in a week if silver really wants to go for a run, and if the dollar really weakens. So I'm just looking at those charts and somewhat anticipating what could come. And so the thing can move. Like we see AGQ, it can move. Where you want to go back, okay, the past month isn't the best example, but if you go back to where it was, let's say March 13th, right, to April 13th, the thing went from essentially $25 all the way to 35. So it can make a $10+ move in a month. So now I have to understand that if it did that, it's at 34. That means it could be mid 40s if it has a similar rally. Of course, that's all, we're getting ahead of ourselves, but it's proven to me it can do that. It can move that fast. So $10 from here is getting me down to like the mid to low 40s. So ideally I would want to sell the 45 strike to be safe and to have a pretty good feel for that. The problem is I can only sell this for 10 cents. Is 10 cents, essentially 10, or I guess 15 cents. The bid is 10 cents, ask is 20. Is $15 worth it right now? I don't know. To be honest, maybe 20 is. 15, not so much. Maybe 10, not so much. So I'm going to go ahead and I'm going to put $20 or 20 cents on there on this. And again, it's a cash. If someone hits it today, it'll fill. If it doesn't fill, it's not, then nothing happens. I'll just do it again tomorrow. Or I don't have to do it tomorrow. If we're down tomorrow, I don't know if I will even do that. So that's the idea. Because I don't want to necessarily give these positions away. The idea is I still want to have them to hold them as hedges and whatnot, or hold them for the reasons that I have in the portfolio. I want to maximize the amount of money that could be made versus trying to sell some covered calls that are too close to the money and then get screwed, right? So we threw the lines in the water. Nothing has hit yet, but all the orders are there. And if nothing fills, nothing fills. But I essentially went on the ask for a bunch of those because that would make more sense for me to take that. But even that, it might not fill today. So I'm not really expecting them to fill. So leverage ETFs for covered calls aren't bad either because leverage options IV multiplied by 3. Prims are asked. Yeah, no, they're not good. That's what we were just saying. Like, they're not great. We were looking at the reality, and I like to look at it more so of like we just did for AGQ, right? What has it done? What could it do? $45 cover call seemed like the $45 area for a month out. I mean, hey, if we were at 45 on AGQ in a month, dude, take me out. Like, I'd be happy to get taken out at that point. So that's fine. But when you look around, like the ones that don't make any sense is the TMFs. TMF makes no sense. Like, TMF makes no sense at all to sell a covered call. None. Like, really none. So I put one for the 1050 because I have 300 shares, so I can sell one covered call at 1050, which is $2 from here, which is like 25% gain on the actual shares, which I would be happy to lock something in if that was a move that we made in a month, in 4 weeks. I'd be fine, but I'm not going to sell my whole position there. That's not the point. So if it hits, great. If not, then no worries. That's the idea. So not the best day to sell covered calls by any means, the best time, but I like to throw a couple lines out, and sometimes they'll hit, sometimes they won't, or most times they won't. But again, right, on positions like that, it's not a big deal. There's an intent behind, right, what I'm doing. Why I'm holding them. The covered calls are almost like a theta decay or a time decay minimizer and an added bonus, an added dividend sometimes. Depends on what your positions are. Muted market just keeps going on. Dude, I mean, it's pretty disgusting. Not disgusting, but I mean, there's like, from what I see from the setup that I'm looking for, there's like one a day, and then the thing is, the market kind of does it what it does, and it makes you feel like this is not going to work because it hasn't worked very often, and then it gives you one that works really nice, and then the next 5 don't. And I end up taking the next 2 or 3, and I'm like, shit, I missed the one, but you take another 2. So it's that's kind of the deal I've been dealing with as of late. But it's coming soon. I would think this week we're going to get a day or 2 at least that's nice and rangy, because we have tomorrow, not much home sales, FHA. So I don't think this is a big deal for market moving information, so I'm not expecting much there. Wednesday, but tomorrow afternoon there's some earnings coming out. Let me see if I can pull out the earnings for tomorrow, all of them. Give me like 2 seconds. Tomorrow afternoon we got some earnings. We've got some decent maybe news on Wednesday, and then we've got, I think, another earnings Wednesday for someone decent. Maybe it's Meta, and then GDP and jobless claims Thursday with some more earnings in the afternoon, and then PCE Friday. So we should have some good stuff as the week goes on. And I feel like we've been kind of hoping, and not hoping, but we've been saying that for a while. But I think the time is coming, because these markets. If you look at the there's indicators out there that you can look at that are essentially chop indicators. One of them is the chop. It's called the chop zone. And, oh no, it's the choppiness index is what I was looking at earlier. I'll pull that up. Let me get the chop zone off of our screen. And essentially what it tells us is how choppy or what we're in. And when we get these extensions up, like it's kind of like the RSI, this just tells you we're really choppy right now. We're really choppy. We're not trending. We're really choppy as of late. And so you want to kind of avoid, in all reality, you want to kind of avoid trading during periods where we are, if you are a support buyer and a resistance shorter, if that's your style, then you actually like when we are down here or trending down on this indicator. If you're the opposite, if you like breakouts and bigger range, then you want to avoid when we are trending down and you want to play when we're trending up. Or sorry, you want to avoid when we are trending up. Okay, that's telling us we're choppy. You want to play when we're trending down and when we are rolling over it on this indicator. Maybe I just completely mismatched, but essentially when chop is trending from chop, or this indicator is trending from high to low, you've got more of a trending and breakout or breakdown market. Again, it's the same thing up and down. It doesn't really care about which way the direction is. It's more so trending or not trending. And if you're support resistance buyer, then you want to see us moving higher on this indicator in a perfect world for your environment to be working nice. That's all that really means. And you could be both, I guess. In my view, I don't know. I find it hard to believe that you could be a jack of all trades. Not that that's necessarily being a jack of all trades, but you got to be very disciplined in the fact that maybe you follow this indicator to some degree or something like that. And you say, okay, this is the environment. So this means I'm looking for these things because of this ultimate environment. When this environment shifts to this, then I look for these things. And you have like a very if this, then this approach to what your setups are. You could do that. I just find that to be a little more confusing and easy to kind of get caught in that middle time frame where it's like, what do I do here? We're kind of in between trend and chop. Do I go with this style or this style? And then it's like easy to mess it up. That's just me. All right, here's the post from Earnings Whispers. Yeah. So this week, what do we got? So today, Coca-Cola was this morning, this afternoon, not a lot of big names. Tomorrow, McDonald's, 3M, Spotify, Pepsi, UPS, Verizon in the morning. Okay. Tomorrow after the close, Microsoft and Alphabet and Enphase, Visa. So there's some big ones right there. Microsoft and Alphabet, Google being the two biggest ones that are market moving. And then Enphase, Visa are interesting to see. At least Enphase has been a pretty big name the past couple of years. Visa, can see how consumers, credit card companies are doing, right? That's interesting. And then Wednesday morning, Wednesday afternoon, you got Meta and Roku, two that could move a lot. Might not be market moving, but that could move sectors potentially, and could be interesting to see how they move because they've been pretty big movers, generally speaking. And then on Thursday, you got Amazon, Intel, Snapchat. Those are like the biggest companies on Thursday that are reporting. So that's the biggest stuff to look at. Exxon's on Friday. ExxonMobil is running up super hard right now, I believe. If I'm not mistaken, it's pushing all-time highs, I think, right now, which is kind of crazy to think about, to be honest. Yeah. Look at ExxonMobil, beautiful breakout of that. Again, that's a perfect example of the strategy that I'm deploying, right? Is when you break a level up that's been respected, you get a nice move. So I'm looking for breaks of levels. And of course, you kind of had one on was that Thursday of last week, but then now you got the one to the upside. That was a fake out, and then you got the big one today on Friday. It's been strong as hell. The stock's been strong as hell. So, I mean, I don't know. You want to short it? To be honest, I think that if you want to think rationally, right? If you want to think rationally, there's no fucking way in hell I would go long ExxonMobil after a 2% day here at essentially all-time highs going into earnings. I mean, you're just asking for a massive slap in the face by going long at all-time highs. That's what you're asking for. But could it rip higher? Yeah, it totally could. It's been a beast. So the CHOP index, yeah, it's a good one, I think, to use. On TMF, I took the 1050 strike. And I just put a little line out there for $5 to see if it'd pay me. That's it. TJ barcoding example of chop. Yeah, it could be. Depends upon the time frame. But I mean, you can almost call like ExxonMobil barcoding, right? The past couple weeks. You know, that's what it is. It's barcoding. You more so see in like small caps and penny stocks where it's like moving a cent up and down, and that's just telling me that either there's no external volume coming in or it's just completely algorithm driven. And I think that's kind of the deal. I think to some degree, that's what we're dealing with on a broader scale right now, is that a lot of the market is algorithm traded right now. And that's just where we are in 2023. And that's only going to continue to increase as time goes on. The thing about that makes me really interested in that whole side of AI and trading is that the nature of how the markets work, I just don't think that you're going to be able to create a set model that will always work. You know what I mean? Like if you're going to create something, somebody has to be behind the scenes actively looking at data, or I guess maybe you can train the AI, right, to some degree to be able to look at the data and interpret that and then change the strategy. I guess you could do that based off what it's seeing, but you would imagine that you're going to have a lot of people or computers, right, almost doing that, algorithms doing that. And so I don't really know how that's going to affect the trading in the investing space realistically in the long run, because it's really weird, right? When you think about that, because, oh, well, if I just make an algorithm that just makes money, then I'll just put money in this algorithm and then let it trade for me. Yeah, but that's obviously anyone would do that if it would be consistent over the long term. It's not that easy. It might work. A strategy might work for a couple weeks, couple months, couple days, and then it's not, right? This is kind of how certain things that were working maybe a year or two ago are not working, or certain things that were even working 2 weeks ago are not working anymore, So it's an interesting thing to talk about, because I don't really know what the reality of that looks like. It's enticing. It's interesting, but I just don't, I'm just not really, I don't know, super sold, I guess, on it as like the reason to just not give a shit and not care anymore because a computer will do it for me. I don't know if it really will. This market shop, 27 trades. Geez, that's nice. 27 trades, up a record amount. Killer. If that's what works, man, then figure out why that works so well. And ideally, you want to replicate that, whether it's on certain conditions that you see or whatnot. Sell in May and go away. We're going to see. We're going to see, right? We're going to see if the sell in May and go away pans out. It would be awesome if it worked out that nicely. It kind of feels like that's already happened though, right? Where it was like sell in April and go away, because now it's like we're just letting the algos and whatever just do whatever they want to do with this market. And it's just kind of floating. It's not really moving. That's what I'm saying in terms of it seems very much controlled by algos, and we're not getting big range because, again, no one really feels you're not getting a lot of people who feel like really bullish on this thing. They want to deploy capital even to certain sectors. And then you got people who've been bearish, but you got a lot of them who are now potentially second guessing that in terms of maybe I was wrong, or maybe this is going to take longer than I thought. I don't know. So if you're playing puts out for a couple months, you're continuing to roll them and bleed and roll them and bleed, roll them and bleed, because it just kind of the reckoning, the day of reckoning that you're looking for, or whatever, just hasn't come. It just hasn't come yet. Yeah. Get better risk management, but yes, if I ain't broke, don't fix it. That's nice. Sell in May and go away was front run. Yeah, I feel like that's not an unrealistic idea. Front run the sell in May and go away in April. To be honest, though, I mean, you had a good rally to start the year off, then you had a decent sell off, and then you had the panic from the bank situation, then you had a bounce back, and so you had a lot already happen this year. As much as it's boring now, you had a lot already go on. So just want to run through this watch list and see any big movers. Affirm is back at 1050. It was under 10. Okay. In the past, Roblox is down. Roblox doesn't look too good. No. I think we had some news about a week or so back. Let's see. AI obviously not doing well. It's down to $18, under 18 now. Oil is doing well. Natural gas, it's trying to curl. It's trying to curl up here on natural gas, up to like, it's got to get back over 250, and then we can talk. But it's just it looks decent. It's got some higher lows it's trying to put in. Bitcoin's down about 0.6%, kind of a doji of a day. And we don't have a lot of indecision right now. Support level right here. See if it holds around 26, 27K. Bitcoin. Gold and silver I'm watching for potential upside, but they're kind of holding nicely. They're doing what you want to see them do. Building a higher low and then potentially sitting up for more. Coinbase down 7% today. Yeah, that's a pretty big candle. Yeah, here's the Tesla. I was thinking like last week, like maybe I'm going to regret dumping my TSLL exposure and whatever. But today so far, I mean, it was down a lot more. It was down actually over 3%. It's come back really nicely. So maybe, Tesla's, that's the thing. It's just weird, Tesla's weird. It's tough to play it because it could, when you think it's doing this, it's going to do that, and it does the opposite. That's the only concern. Amazon was funny today. Amazon has earnings this week on Thursday, but it broke out to a new high of the year, close. It was getting up there, and then hit up to like 109, and then dumped like $3, $4 off of the highs. Pretty impressive move. Here's a 5-minute chart, and it's pretty nasty of a move down. Let me adjust this chart. Look at that. I mean, off the open, you went from like 107.50 all the way to 109.20. And then you went from 109.20 in a span of from, let's see, my time was 8:45 to about 10:25. So, okay, call it an hour and a half. Roughly speaking, the thing went from 109.25 to 105.10. Like, geez. Imagine if you had, I mean, that's the thing. It's not as easy as you think, because you look back and say, okay, where was it telling you it was going to do that? It maybe wasn't really telling you. It was more so the nature of this environment, that a new high would be an opportunity to sell off and to play shorts off of that. And that's what's been kind of working. But yeah, you didn't really have a clean area of resistance to go, oh yeah, that's a clear spot. Why would you go long there or short there? It wasn't super clean. It just kind of did its own thing. Nailed the AI short. The AI short was nuts. But yeah, that's one of those things that as you've been there and done that. And I just saw enough people jerking AI off on social media over the past couple of weeks. And there was one guy that I saw jerking it off, posting monstrous gains. Not pretty sure. I'm like very, very sure that it was unrealized gains, and that there's no guarantee it was even real money. Let's be honest here too. And it was on these days right here, talking about how, he was calling AI the past couple of weeks about how it's the next, the stock of the year. This is going to be the AI story is just beginning. And don't get me wrong. I don't think the AI story is going anywhere. Like, it's not going anywhere. It's only going to be more of a topic going forward. But this is just the perfect scenario to sucker in the most amount of people and then screw them and bend them over. Essentially what it is. I have been the guy who fucking buys AI at 35 or 34, and then says, no, I'm going to hold it until, it comes down to support. Once it breaks below support, I'll sell it. And so I'm the jackass that's buying it up here. The dumbass is buying it up here and then holding the whole way down, going, I'm down like fucking, what is that, 25, 30%. Maybe I'll buy the dip here, and I'll buy the dip. I'll average down, And then we get a bounce. I'm like, oh yeah, look at that bouncing. And then that sells off. And then, what your bias, my bias is I'm not looking at these sells. I'm not looking at what's happening here. I'm just looking at the pressure on this level 6 times, 7 times, 8 times in a row. I'm looking at, hey, that's support. Until proven otherwise, I want to be. The thing is support, and support's more valid the first couple times we bounce off of it. You want to bounce off support 17 times, that level eventually is going to break if we are putting pressure on that level. And so the probability there was, hey, in my head, you've suckered everybody in well over $20 for an average. You've got everyone thinking that this is going to be the stock of the year, the sector of the year. And now you've got 37,000 other AI stocks coming out of the woodwork who are saying, hey, look at us over here, these small caps and whatever. And so you're going to get money that starts to pull away from this to some degree, and the volume spreads out and everyone's not focused on one stock. And, then we start seeing some pressure, the support breaks, and boom, support breaks. You get a little bit of a headline to tee it off. Boom, done, game over. And not that this is done, long term. I have no idea. I'm just talking about for a trade, right? For a trade perspective. And I've been the guy who would be buying AI 35 puts at 30 plus and hold them all the way down, and then have them go to negative 90%, So in a perfect world, you want to go short shares, not play puts because, whatever. But I just played puts. That's how I did it. So the Amazon pump today, I had no idea it collapsed that bad. Yeah, it was pretty bad. That Amazon collapse was pretty nasty. AI is here to stay. The hype is too high. Yeah, that's what I think. It will digest, and then the quality will ultimately prevail. That's just how it works. This will digest. It will kind of chill out and whatever. If it wants to come down to, $10, oh, great. If it wants to come down to 12, great. If it wants to just kind of consolidate right here, great. And if this is a quality company over time, and earnings and whatnot, we'll support that over time if it is quality. Maybe we'll have something like this, and it will have a nice kind of grind and rise to fame. And this could be, a multi-bagger over the next couple of years. It could be. It's a big if. It could be. But again, right, this is the same patterns that you see play out. And the backside is always a bitch to be stuck in when you're on the long side and it starts playing the backside, because I've been there a million times. Lost a lot of money in doing that. Good support, only 2 or 3 taps. Other than that, it's more risky. Yeah. And that's the same thing as what I had with the AMD today, for example. Same thing with the setup. Like I had this AMD setup that I was looking at, and you had, how many times did you break down, right? You had multiple levels that you broke down here. You had this breakdown to new lows here. You had this breakdown up here. You had, a couple stair steps to the downside on it. And I played this short on that breakdown because I said, hey, we got a bunch of levels here that it's not really, it's respecting. And then we got pressure. We got lower highs. This looks like a good short. But looking back, the setup played out like 3 times already on the day on the stock. And so not the cleanest, but it pretty much panned out 3 times. Eventually this is not going to work. And then you got the reversal. And you got the same thing. Morning dump, afternoon rip. Afternoon rally. I won't say rip. Afternoon rally. Good trade. Even had a good fundamental idea to go long technicals. Yeah, a lot of it was just psychology. And there's not many stocks that do that, because a lot of them are small caps. When I say don't do that, is because a lot of them are small caps that don't offer options or have super high hard to borrow rates, and are the playing field is a little more difficult to get on, because a lot of the stocks that play out like this, there's a lot out there that are penny stocks that you don't even hear of, you don't even know these exist. Half of them, or more than half of them, probably 95% of them. This plays out all the time. It's just that you got to have a broker and you got to know what you're doing when it comes to hard to borrow rates. And then there's also the risks of squeezes and whatnot. So there's a whole other factor to think about. When you're looking at a bigger name stock, a little bit of a higher market cap, and not that this is a large cap, it's a 2 billion market cap. Yeah. That has options, that's a higher price. It's a little bit easier to play. Same thing with a lot of the growth hype stocks and whatnot, and how they did very, very well for some time. For example, here's like a Rivian, right? Actually, no, Palantir is a good example. Palantir is one of like the best examples, I think, out there. Because you have that setup where it's the same thing, right? You had this big, massive rally The stock goes to 40 something dollars here. And then you have this series, my bad. You have this series essentially of, breaking down and weakness and just never being able to get back up to where a lot of those people were buying it up here. And then, there's this massive unravel over time. You want to look at it more so on the weekly chart. The daily is not the best example. On the weekly chart, you'll see it a little bit better. I mean, it's just, it tried, and then even had this low right here, had some higher lows, and then it had this. And then once you put this lower high in right here, that game was over. Game was over. It just took its sweet time to play out. Wait for profitability, no cash burning before buying tech growth companies. These are the best returns. You would think, right? But a lot of people don't want to do that. They want to be in early and they want to buy the hype. And I get it. Don't get me wrong, I get it. But I think that there's a much better, here's SPY's weekly chart, by the way. You've got a much better opportunity to trade off of the hype versus try to actually invest off the hype. I think investing off the hype is the most idiotic thing to do. And you will lose more often than not, unless you have absolutely killer balls to hold through, like essentially the Amazon of the tech bubble. If you can hold through the backside of Amazon and the tech bubble, then yeah, fine. You know what I mean? If you know what you're looking for, then great. You want to go look at Amazon, if you want to go back in time and talk about that, right? Like if you think you know what you're talking about and you think you've found this monstrous, multi-bagger, incredible company, Amazon from the top here, right? Back in 2000 or essentially 2000, January 2000, the thing drops 95%. 95%. No one's going to hold through that. No one's going to hold through that. Let's be honest. So it drops 95%. And yeah, sure, let's say you bought it somewhere up in here, let's say you bought it, before the peak, but around there, you're still up 3,000, 4,000%. Even if you bought Amazon, almost peak tech bubble type of time frame, if you had the balls and you held it for 20 plus years, yeah, and it works out, yeah, you can do fine. But that's the problem, is that you don't know, and so you could be waiting for a while, and you have cash tied up for a while and something, and it's like, do I buy the dip or not? And then you don't know. So it's a whole much more complicated game unless you wait for something that's been more proven. 5 minutes to go until close, and we are essentially flat on the S&P. This is going to be the shittiest. Look at the past 3 days. We are going to have 3 dojis, 3 different types of dojis, essentially, the past 3 days in the S&P. QQQ, pretty much same thing. IWM, same thing. Dow, kind of. Not as, yeah, pretty much. I mean, you go back even, to Tuesday of last week, you got a lot of wicks. Indecision is what we got. ETF for pizza. Eats. PEJ and XLY. XLY? Really? Is XLY an ETF for pizza? I feel like that sounds familiar. Consumer discretionaries, I guess. What would take to start an ETF? I have no idea. I have no idea what it would take to start an ETF. There's a lot of, probably a lot of, I guess, legal procedures that you have to go through. And then you'd have to have probably certain criteria met in terms of, I don't know if I want to say your education, but you'd have to pass certain tests and get certain certifications if you're going to run and handle people's money. I would imagine. I don't think anyone could just start an ETF. I could just start an ETF. You guys could just start an ETF unless you have certain certifications, I would imagine. But I don't know the whole detailed process of it and how hard it actually is. I mean, if you're in the space professionally, I don't know if it's, and you might have certain certifications anyway for your profession, it might not be as difficult as you think. But who knows? SPY did flat again. The robots are just taking over. The one that the algos are turned into bullish or bearish mode. Holy shit, we're gonna get a day. And what you tend to see and what you could see, if you look at that, let's go back to SPY and pull up that choppiness index again really quick because it's actually kind of cool. If I go to the choppiness index, if you look at this and you see like on the daily chart, you know, some of the biggest moves on this indicator come off of some of the highs and lows. So we had chop for a while back in here, and it was pretty painful. It was like 2.5, 3 weeks in mid-December into January. And we spiked on the choppiness indicator of 71. That's the highest I've seen this thing, you know, in the past year plus. And then we had a massive move from like 380 on SPY all the way to almost 420. So huge move over the next couple of weeks, next like month or so. So big move there. Now, does it have to be up? It could be down. It doesn't have to be up from here, right? But same thing. You know, we had this choppiness indicator that went from super low, which means we were trending, and we were trending nicely to start this, or really from like mid-March to mid-April or to early April. And then that's completely changed. And so we went from like a pretty nice trending market to the upside to now chop, super choppy. So it's kind of a cool thing to look at and watch because we should be expecting to some degree some decent sized move in the coming days and weeks off of this chop. Same logic with holding 3x ETFs long term. If you can stomach a 90% or yeah, like if you want to hold Soxel, right, and you're like, yeah, I want to buy and hold SOXL, you know, because I think this is going to be the next, you know, sector that's going to be the strongest sector of all time for the next couple of years. Like again, same thing. Like pandemic was a good example of that crash, right? Soxel drops 83%. So let's say you put $1,000 into it, or you bought 100 shares to be able to sell covered calls. You would have paid, you know, almost let's just say you bought the top. Let's say you paid $2,000, right? You paid $2,000. That $2,000 now turns into $358. And that $358 then turns into $7,300, you know, a few months later, years later. So it's all about timing, right? It doesn't matter about when you're playing that and when you're playing those types of things for the huge, if you can nail a period of time for a 3x ETF that does well, which is why I think the macro swing approach is pretty solid for that type of stuff. Because if you have got a macro thesis, or let's say you're looking at this from a months to quarters to maybe a couple years max perspective, you know, the exact timing you're not so sure, which is why you kind of would avoid the options and you would go with the shares of a 3x ETF. You know, it makes sense. I get it. I really do. But you have to be aware that if we see drawdown for a little bit, you know, you could lose the majority of your position, right? Like it could be gone. Like that's how easy it is. So if you get caught in holding, you know, all of your money into like a Soxel, right? Or let's say you bought a TQQQ, 3x leveraged QQQ, because you're like, you know what, I really think the market's going to do well the next couple months, and I want to capitalize, but I don't want to have to buy options and have to pick an expiration date. But I want to get a hold of this. I want to maybe sell some covered calls on this run and capitalize. But you buy TQQQ, for example. Like let's say you buy it right now, and we go into a period where the market goes to new lows. You know, TQs is probably going to go to new lows here. You're going to be down 50+% maybe on this position. Now, if you're averaging in and you still believe in the bigger picture, maybe you're going to be fine. But you could be down humongously if the timing is off. So that's why I like these things on when it comes to buying into the fear or the opposite, or selling into the greed. You can buy the 3x downside or 3x inverse ETF or some of these things too. It's great. Like if we have a big rally from here, let's say this is just like a flag, right? And we end up having a big rally off of this into a new push to highs on the year, and the market rips higher. That's a good time, I would think, to buy SQQQ, you know, to average into that, or to buy, you know, even a VIX, you know, hedge. And again, the same thing. Those things can go to zero, and they're essentially designed to go to zero. But if the timing is somewhat right to hedge yourself, or to maybe capitalize off of the psychology at play, or everyone's kind of buying into the breakout and buying into the euphoria, and then we get a backside of that, you know, there's opportunity there, right? So We'll see. We will see. Thought KO was going to bounce off the 64. See, that's the problem was with that, right? When you're doing that is, if you look at it, right, for example, is that if you keep averaging in, and then you can have a strategy that does it. The problem is are you going to be able to handle this if you're going to hold that whole way and be able to be profitable in the long term if you're going to average in? I think averaging in is fine. It just there has to be kind of a systematic approach ideally behind the averaging in, you know? Eventually we'll look back on this choppy period and that's what's going to happen. It could even be next week. You know, you could look back on this next week and we could be at 390 on SPY, or we could be at 430 on SPY, right? And you're like, remember we were just shopping around 412 for like 17 days, and we'll be either like up here or I'll be down here. Like, you know, who knows what we're going to be, but it could be that fast. And then things just shift, right? And it could be weeks and weeks and weeks that we just see trending days and, you know, good action. So I guess good action is all relative, right? I say good action because I would like to see a better trend in a direction, but we don't need to have that, right? Like you can be a support and resistance trader and that's it. And you could be doing really well, just kind of chipping and chopping away, a couple bucks here, bucks there, a little, like just playing your ranges and it's working, right? You ever peanut butter on your bagels? It's a funny question, but I have discovered the ultimate pre-workout meal, in my opinion, because, okay, I've been getting up really early lately. So used to be getting up. I went through a period where I was a bitch, honestly, and I'm getting up at like 8, even like 8, like 8:15, and it was like really bad. I guess that's just for me in terms of being productive and getting things done in the morning, which I find to be now my favorite times of the day. Like it's honestly, I love it. It's a little tough to do when it's dark, but now that the sun's coming up earlier, you know, it's only dark for a little bit if you get up at like 6 or whatever. But I've been getting up at like 5:45 pretty consistently. Between 5:30 and like 6:15 has like been the time, like every day, even the weekends now. And the problem is that I try to work out in the morning on Monday, Wednesday, Friday, and Saturday, at least sometimes Sunday. So like most days, Tuesday, Thursday, I'll be able to work out midday. That might need to come, and that's probably going to come to an end soon as it gets hot as hell in Texas, because I can't be working out outside, which is what I'll do the Tuesday, Thursday workouts or runs. I can't do that outside when it's 99, 100 degrees. And I'm like, shit, it's been kind of cool here, like, to be honest. So I can kind of get away with it now, but I'm probably gonna have to do it in the morning. But what I found is a piece of, I think it's Nature's Own, like white bread. It's like the thick one. It's like the thick cut Nature's Own white bread. So it's easy to digest. Hits you really quickly. It's not going to be like some whole wheat grains and shit that, are probably better for you, but let's be honest, right? That takes longer to digest. It takes longer to process and whatever. That hits fast. It's like a little bit of, it's some food, but it's not a ton. A light coating of peanut butter on top and then honey drizzled. Oh, I never really liked honey. Not that I didn't like it. I was just like, I don't know. Honey's kind of weird. It never was a huge fan. This is like the best pre-workout meal, especially when like you get up and you're like, it's freaking 6 a.m. It's dark outside. I just got up. I don't want to eat a meal. I don't want to eat a massive thing. I'll take this and on the way to the gym, I'll like make it. And then on the way out, I'll pop it in like a paper towel and then eat it in the car. Like that's what I'll do. And just so I have something in my system, because I'll go to the gym on the days that I lift and I'm like getting the hunger pains, like the stomach is clearly empty. And I'm like, shit, like I'm hungry right now. And it could not ruin the workout, but it can kind of mess you up a little bit. Also, you got no carbs in your system, and that could help you during a workout when you're going heavy and whatnot. So it's good to have something, but not a ton of food where you're like, I'm going to throw up because I'm so full. So you don't want that. And then when I come on runs, I'll do that about 30 minutes prior to when I start running, and it's fine, right? It's not like when I run, I've been concerned that I'm going to throw up in terms of like, oh my God, if I eat too much food before I run, I'm going to throw up. But that's been like the perfect amount where like, I don't feel any discomfort stomach wise. It's easy on the stomach, and it seems to last, for a little bit of time, at least gets me through like an hour or two so that I can deal with, the workout and then eat, an actual meal afterwards. So that's been what I do. Blueberries on top. Yeah. That with, strawberries, blueberries, even bananas, people do. Yeah, it'll be, but now my bagels this morning, I had butter and jelly. Sometimes it'd be cream cheese, not regular cream cheese, the whipped one. The whipped cream cheese is 10 times better than the regular. If you guys don't know what that is, just I'm telling you, just do it. Go to Walmart or wherever you buy cream cheese and just buy the whipped version. It's like 10x better, in my opinion. DCA on good ETFs. Yeah, if you're buying, if you're going to dollar cost average into a 3x ETF, that's obviously a riskier than dollar cost averaging into like SPY or an S&P, a non-leveraged ETF. There's I don't want to say that there's no risk. There always is risk, but the risk is so much less on something like that. DCA when there's blood in the streets. Yeah. This is not the time to be this is not an example of blood in the streets right now, right? This is kind of a weird, I don't know what's in the streets right now. Got some lukewarm water in the streets. That's all we have. 2 p.m. Yeah, I mean, there's a lot of nothing and I'm not necessarily about oh, you got to get up at 6 a.m. or 5 a.m. to grind and all this. No, it's not about that. You can do whatever you want to do. You can get up at 9 and be a very well-functioning person that does very, very well for themselves and is very efficient, right? Doesn't matter. I just found that I like getting things done earlier, and then you have the rest of your day, and then you can get the work, especially when it comes to even now, running and stuff. It's hot as hell during the day, so I don't like running inside. I hate running inside. It sucks. Treadmills suck. They have their time and place, don't get me wrong, but I got a whole freaking city outside. I'll go run around all the streets. I'll run around, check out different neighborhoods. I'll run around here. It's just more, it's enjoyable. You can explore stuff, and I don't know, it's just kind of cool. You'll just see things that happen. Oh shit, saw this crash, saw this idiot do, I don't know, this stuff happens throughout the day. It's a little more interesting than just running on a treadmill. You're looking out a window or looking at a, little digital track that you're running around. You know what I mean? If I cook for you, your 6-pack would turn into a cake. No, and I also used to be like that. Usually I don't eat breakfast. I used to be like that on when it came to food and stuff. The problem is that, and there's nothing wrong with it. If you operate very well, then good. That's fine. I got to a point now where it's 4:30 a.m. I roll over. I'm hungry. I don't know. My metabolism is just ripping right now. 24, I'm young and I'm active, very active now. So the metabolism rips and you're hungry as hell. So it kind of sucks. And so that's why I feel like I want to eat, because that annoyance of being hungry while working out has annoyed me to the point where I feel like it's impacting the workouts, whether it's a run or it's a lift. I feel like it's impacting me. So I got to have a little something, and the peanut butter and the honey and the bread will do it generally. And it's easy. I lightly toast it too, and it tends to work fine. I'm about to go outside right now. I should probably get outside right now too. That's what I feel like. But no, yeah. But when it comes to that, I could eat whatever I want to eat realistically, and not have to really worry about gaining weight because of how active I am. Although, I have this whole. To me, it's important to eat good, feel good, right? So if I eat shit, I'm eating crap and whatever, I'm not going to feel great, even though the scale might not move very much or whatever, because it's the same amount of calories. It just, quality food tends to be what makes you feel the best, and you're sharper and you're feeling good and you're not having stomach problems and you're not on the toilet all day. You know what I mean? That's the worst. Those are the worst, the worst days. But I found that, hey, if I used to just only lift a couple times a week and just do very light, walking cardio. As I started running now, I'm because I'm burning so many more calories a week, I need to eat more calories a week to maintain my weight. And I'm not really trying to gain or lose. I'm just trying to kind of maintain the weight that I'm at now. It's a pretty healthy weight, but improve my metrics, whether it's strength and whether it's endurance wise. I know it's not necessarily going to be as easy to do strength with everything that's going on, but I'm still going to try. But you can eat like a freaking beast, which is awesome. I'm screw cutting season. just like be more active, and your body is going to naturally need more food. And so it's either, can you keep up with giving it the food that it needs? And if you can't keep up with it and it's too much, then you're going to lose weight, not like just by default, you know? So that's kind of my motto this year, is more like, screw cutting. I'm not cutting shit. I'm going to eat whatever I want. I'm just going to run a shit ton and up my mileage every week, little by little, and I'm going to burn more calories. Going outside for a mile for this. Well, I'll let you go do that. I'm going to wrap things up here. Got a couple things to do here myself, and then maybe I'll see if I can get outside at some point this evening. It was cloudy this morning. Now I got sunny out, so looking good. I'm excited to be outside. So thanks so much for watching, guys. Thanks for hanging out on the stream. Tomorrow's Tuesday. Oh yeah, I'm going to post the second half of this weekend's video tomorrow. Actually, I think it's actually more interesting. The second half of it, it's shorter, a little bit shorter. I'm posting that tomorrow, and then we'll do a stream on Wednesday. I think Wednesday night, and then we'll do a Thursday. So Power Hour will probably pass on Wednesday, and then we'll do a Thursday Power Hour stream because we've got some earnings, Amazon and whatnot on Thursday. Amazon, Intel, Snap. Okay, so we'll just hang out for Amazon on Thursday. That's the plan, because there'll be some stuff to talk about then. And then we'll do a normal Friday Power Hour stream. That's the plan. Thanks so much.